The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. I'm going to have Norm Winsky as my guest from AstroTrend at the half hour. He has some important things that he wants to bring to our attention that I think we should listen to. And then tomorrow we're going to have Rich Anderson on to talk about the grains, because we've had some very grain reports came out yesterday. The markets have actually held up relatively well, given the fact how bearish they were. So Rich will talk to us about that. But I wanted to start the show today by looking at the relationship between the U.S. Treasury bonds and the junk bond market. The junk bond market is quite large, and the U.S. Treasury market is immense. So these are two very, very large markets. But what's important about this, if you'll look at it, you'll see that there is absolutely no fear in the junk bond market at all. I mean, it's holding up incredibly well. And here we're looking at the Treasury bonds that have just been in an absolute free fall. It's been one of the more rapid bear markets that we've had in quite some time. Just over the last few days, I wanted to show you folks this, because it's just a perfect Fibonacci relationships all the way through here that we've had. Today's high was an exact, to the tick, 61% retracement of the high we made the previous day. And the low we made the previous day was exactly 1.27 of the swing from the 7th to the 10th. So we're having another big swing down. We're almost, in fact, we're setting right at the 61% retracement here at 152.20, which comes in another 7 pips, and that's going to be interesting to see if it's going to hold that. But we have some problems in the debt market, folks. The rest of the bond market seems to be seeing it. What Basil mentioned just the other day was the fact that we had, well, he mentioned it today, was the fact that we had the markets are actually doing the work of the Federal Reserve by raising rates for us. And that's, in fact, what they've done. The rates are going higher. We've been saying that for quite some time. The Federal Reserve has not acquiesced to that. And what they'll probably do is come out with a statement saying, well, the rest of the market has told us, the rest of the world has told us that these prices are going to go down, and so we better raise interest rates now and stand aside. That will be my guess of what's going on. But this bond market collapse from 164 down to 151 is really quite immense. It just hasn't matriculated down. That's a pretty big word for me to use, but that's the word I have in my vocabulary. And but it looks like it's wandering down even farther. If we get much below 151 today, who knows where it can go. I mean, it's been as low as 147 recently, in the past year or two, so it could certainly do that. Another market that really deserves our attention, in my opinion, is the VIX market and the VIX index. This has really got a very interesting pattern here that our good friend and teacher Basil talked about just a few minutes ago, and that is the we've had since the 24th of April, almost 3 weeks ago, the market in the VIX has had higher bottoms all the way through there. Folks, you've got to go back a long ways before you see something like that happen. That tells us that there's a lot of support coming in here, and somebody must be taking some kind of serious protection. And so we'll keep an eye on this, but as long as we can keep the VIX above that $12 level, I think we've got a chance here for a correction in the market. It's an interesting situation where we have on all these things. So that's it. Now, I wanted to spend just 1 second here on a trade setup that, I know you guys follow pattern recognition, and these are the kind of things that we like to see when they occur. So let's just put one up here and take a look at it. Might not work, but you should wait to the end of the day to try to put it up and everything. But this will put it up here and let you take a look at it. It's a currency cross rate, and it's a cross rate between the British pound and the U.S. dollar. And as you can see, since the April 13th, we've gone from 145 to 157. We've done it perfectly in an ABCD format. The first one completed back on April the 19th. We backed off for 3 days. We rallied up 8 days into the 1st of May. The market then backed off for 5 days, and we rallied up 8 days now, right at the 1.618 level. So this area 157.50 should be some pretty strong resistance, and if it's good, it's not going to get above 158.50. If it gets above 158.50, you have to be a little bit skeptical. But if you look at this, really closely, and we should do this because this is one of the fun things that I get to do with doing the show here, and that is to look. You'll see that the symmetry between the second ABCD leg that started on the 21st was 8 days up, and then it pulled back for 3 days again, just like it did back on the 20th, and then it went up 8 days again today. So if the market makes a lower low today, below 156.40, this would be a shooting star type pattern, and that's probably what you should wait for. But this is the area where it should run into resistance. That doesn't mean that it can't go higher. But the symmetry on this is absolutely amazing, because if you look at the slope of the AB leg and the slope of the CD leg, they're running at the same ratio as far as degrees. It's absolutely amazing, and the price is coming in up in this level too. It might not work, but this is mother God and country stuff that you like to see when when you do get these things. So that's what we're watching here in the British pound today. We have a similar situation in the euro, but it is not nearly as perfectly symmetrical as we have here in the British pound. The British pound one is just got just about everything that you want. We have a really interesting format coming here, formation coming here also in the grains, but we'll hold that for tomorrow because I'm sure it'll wait 1 day for us, and we'll see if that's going to come to fruition, because it's certainly got a lot of things telling us that we could be right at the point of no return here in the grain market. So you either got to stop right here, or they can go down a lot further. That's the same thing that's true that we're looking at when we're watching the British pound, folks, because if it gets above that 158.50, we don't know where it's going. Well, we never know where it's going to go anyway, but if it gets above that level, we're certainly looking at something that can be quite ominous, and you don't want to stand in front of ominous. He's not a very happy boy and can really cause you a great deal of problems. The stock market has still held the higher highs from April 27th. We did not make a higher high on this last run up. We almost did. We had those 250 to 300 point down days. And folks, those 250 point to 300 point up days will be reversed, and you'll see mirror images of those. And we've had a 300 point move in the Dow now that we had on Friday. And if you multiply 300 times 1.618, you're going to come out with 5. So the next big down move we're going to see a 500-point downswing in the Dow. So don't be surprised. I don't even think it'll be quantified as a crash. It'll probably be quantified, as a buying opportunity. That would be the way I'd probably look at it. So just remember that it is coming. This volatility that we've seen is just beginning to raise its head, and it's going to get even more and more volatile. Folks, when they can scare the bejeebies out of the bond market, like they've done in the U.S. Treasuries and also somewhat the Treasury notes, you can imagine what's going to happen when the thing really does turn. What really startles me more than anything else is the way that the junk bond market is held up. Compared to what's happened to notes and bonds. It's just truly amazing to me that that's the case. Now, I also believe that if we get stronger than we were last Friday, and the market turns around and has a big move up, we could certainly go far, far to the upside. So we have to keep that possibility, in mind at the same time that, if you're wrong on this, we might have that acceleration blow-off move that Basil had talked about on his special webinar that he gave, and he's mentioned it several times on his show, that we haven't had that parabolic run in this bull market like we had in 1929. The 1929 market moved, I believe, 20% in a matter of about 5 or 6 weeks, as I recall. Basil has those figures, but it was close to that. It moved from about 326 to 383, which was about 20% very, very quickly. It topped on September the 3rd, 1929, and then it, certainly went down for 3 years, and that's one of the longer bear markets that we had. I think the longest bear market that we had was back in the 70s, from 1970 through 1974. I believe was one of the longer bear markets. And then we had one from 1980 to 1982. So the bear markets usually last 3 years. Sometimes they last 5, but they should be, because we live in a great country, and the bear market should be shorter than the long bull phases. But this has been one of the longest and strongest bull phases that we've had in a long time, and it certainly looks like it wants to have a little bit of a rest up in here. In fact, if it's going to do that, any strength at all, taking out those highs we made Friday would tell us that we probably are going to go higher, and you just want to try to catch on board and get something. As regarding that, one of the stocks that has been asked in the in the room here is the stock of Baidu. And I want to put this up so you can take a look at it. Baidu has completed a whole bunch of ABCD patterns here, and is setting at major support down here at 189. The only thing that's negative about this, it's a much weaker than market stock. But remember, each of these stocks, it's a market of stocks, not a stock market. So this stock has to be viewed by itself. It's probably a buy in here with a stop below the 183 level, which would be about a 3% risk on this if you were looking, to take a look at Baidu from the long side. So we want to be able to look at that. Someone's asked me a question: what are my license plates numbers in Arizona? And I have custom plates that I've had ever since I was in California, and it's called No Risk. And a long story behind that. My good friend Jimmy Elder got me to buy those, but it was impossible to get any sequences of Fibonacci numbers, and so I decided to go with that, and it turned out to be something relatively easy for me to use. And I've had them for, oh boy, it's been I think 27 or 28 years I've had those, so that's a big thing. Now, we've had a heck of a move today in gold, and we've had a heck of a move today in the silver. Both of those have held up extremely well. The bottoms that we looked at didn't look like they wanted to hold, but sure enough, they certainly did. And so this gold and silver, the thing that they're running up against now is they're running up the highs that we had several weeks ago. Give me 1 second to get the gold chart up here. Oh dear, it's disappeared. That's impossible. Well, let me get it back. Oh dear, computers, you gotta love them. Well, you don't have to love them, but if you don't, you're in big trouble. Okay, we got to take a break here. When we get back, we're going to be right back with gold and silver. Dow is up a tiny bit on the day, and so is the NASDAQ.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we want to go over the gold and silver because this is significant what is happening here. This triangle that we've been talking about over the past few days has certainly broken out to the upside. We've held higher lows ever since, April the 26th. And today with the breakout, this certainly means something. We've had a really wide range today. You know, silver had a pretty good range of almost $1 an ounce. Silver about $1 an ounce, and gold over $20 an ounce. So as long as this bar stays really strong today, now if it reverses, then that's a whole nother story. And then we've got half a day's trading left. So the thing that you want to keep in mind is that we did not take out the highs of March, either in gold or in silver. And it's still early, but we should have done that given the power of this buying, and it could do it easily. But you want to watch this very closely. The fact that we broke above this triangle is very, very important, and we should not go below that triangle level anymore. That would be 1640 per ounce in the silver, and it would be around $1,775. Let's try it again, Larry. $1,175 an ounce in the gold. If we had that happen, then there's trouble in River City, and this thing is going to go a lot lower. But right now, you know, the starting gate is in, the engines have been started, and this puppy looks like it wants to zip. I hope that you might have got a little bit of that. I've been recommending, I don't care what price they are, at least at this level, is to buy some silver coins, quarters, dimes, and halves that were minted before 1964. The reason for that, folks, when I was in graduate school and how I got started in this whole business of trading was because of Gresham's Law. And John Gresham, who was an economist back in I don't know what god-awful year, it was before I was born, probably around Newton's time, and he said that bad money drives out good money. And good money was silver coins that were actually minted by the mint that were 90% silver, that everybody knows what they look like. They know the pictures on the front, and they know how much they weigh and the whole bit. And so that's just like little tiny pieces of bullion. That money, which was good money, it drew bad money, which was the paper money that without the that says Federal Reserve note instead of pay to the order, the bare 1 ounce of silver. That was a thing of the past after 1964, and so that was bad money. That bad money drove out the good money, which was a silver coin. So that's why you want to own some silver coins. You ought to have some of them just for historical purposes to show your children and grandchildren. The coins themselves are quite beautiful, and it's certainly worth your time and effort to do that, especially if you have little ones. Kids somewhere between 4 and 10 or 11, they have a really strong interest in that, and it's always good to see how some of these things happened over the period of time. So keep in mind that that's what we want to have happen. Anyway, have some gold and silver, folks. That's all I can tell you. It's something you're not going to be sorry for doing it. Maybe it goes back to $4. I don't know, but I don't think it will. I don't think it go much below 10. But who knows? But if something happens really bad, at least you'll have some coins, to go out and to buy stuff. Because if we're not using computers and stuff and credit cards, people will want real money and do it. I'm not a survivalist or anything like that, but I'm trying to be a realist. We got a debt problem in the world that's going to be coming due pretty quick. And when the fat lady comes to sing, boys and girls, she's going to have a huge orchestra with her, and it's not going to be fun. And the dance floor is going to be very, very crowded. So you got to be able to get your tickets to the dance before the orchestra starts to play. So get yourself some silver coins. If it goes down, you have someone to blame. Blame old LP. That you can blame me, because that's what I really strongly believe this. I'm not into the dry food categories. I'm not into the assault weapons or automatic weapons, even though our house is surrounded by claymore mines and a few other incendiary devices to protect the family. But other than that, just have a little bit of silver on hand, folks. It's a good thing, and you want to be able to really have it, because something's not right here, boys and girls. This quantitative easing is going to have a nickname. I don't know who's going to give it to us, but there'll be a different nickname to it in a year and a half, when it's finally, capitulating to the downside, and we'll have to figure out, much like they had the banks too big to fail thing. You didn't hear banks too big to fail when it was going down in 2008, and Henry Paulson was begging for $700 million to bail out the banks, and which he did. And what did the banks do? They turned around and did the same thing they were doing then. But that's the way the people learn. We've got Norm Winsky from Astro Trends coming up next.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've got a lucky lottery winner. The first caller of today, Jim in Denver, the home of the Mother's Day snowstorm. How are you, my friend?
Okay, Larry, how about you?
I'm okay. How was the weather?
Oh, I tell you, it was quite a surprise.
Yeah. My daughter told me she couldn't believe it when she saw it, but who knows? What can I help you with, my friend? Yeah, she lives in the Washington Park area.
Okay, all right. Well, I'm north and west of there, so.
Okay.
In any case, I hear you talking about silver coins and bullion.
Yes.
And I recently bought some, like, newly minted, I don't know what you call them, Morgan silver dollars. They're pure silver. They weigh 1 ounce.
Sure.
And
those are called silver rounds is what they're called.
Yes. Mm-hmm. Yeah. So any opinion on those, Larry?
I love them. I think that, first of all, they're beautiful. I think, and they're to give as gifts. They're incredibly nice, but they don't have a numismatic value as yet because there's so many of them minted. But for a bullion coin, Jim, you can't do any better. It's just absolutely perfect for that. That's what I've been trying to, let the folks here know, that if you have that particular coin, you've got a really good shot at something. And they probably run you about what, $20 or so. How much were they each?
Yeah, I tried to buy them on sale, so I'd like to pay more, like, 17. But they every once in a while you can get them for like 17 or 17.50. But they're more like 20
anything
or
under
21
$20,
or 22.
I think, is a steal for two reasons. One, they're pretty, they're pure silver, and not only that, but everybody recognizes them, so they're easily assayable and they're easily for liquidity. You can't ask for anything better. I just love those coins.
Right. And then the more you buy, the deeper, the cheaper they get. Let's put it that way.
Oh, sure. Yeah, you buy 1,000 of them, you're going to get them probably for 17 and a quarter, something like that.
Right.
They usually, you figure about 4% above spot. And if we've got silver at 17 right now, 4% of that would be about 1750. So that would be about right. You could get them for around 1750 where they're at right now.
Okay. All right. Well, I just wondered what your opinion was. I appreciate the information.
It's my pleasure, my friend. And
thanks.
Thank you for calling in.
Okay. Bye.
Okay, we've got Norm Winsky on the line. Norm, are you there?
Yes, sir. Great to talk to you, Larry. Thanks for having me.
Thank you. Now, listen, you got the whole time, so let's just have a little fun here and talk a little bit slower for me, because remember, I was born in Terre Haute, so I don't have that big city mentality that a lot of people have. You got to, bring me to the trough and then show me what to drink, okay?
Yes, sir.
Listen, I'm showing you the first chart I'm showing you is that the first chart in your letter is the one where you have this triangle, this ascending wedge triangle. Do you want to start with that, or do you want to start with something else?
Well, I was going to start on the first page there and just recap what we did a month ago on April 15th. You may remember had a pretty good call there with the reason I asked you on your show there was just ahead of the April 16th Pluto turning retrograde in Capricorn.
Yeah, I've been telling the folks how accurate you were, so they're very well aware of this.
Okay, and I said that had to do with cocoa, hogs, bonds, coffee, and stocks. And then we had the 17th, the Pluto turned retrograde the night of the 16th. And you may remember that the Dow dropped intraday 350 points, and we closed down 279.47 that day.
Yep.
So that was a pretty good reversal there. We rallied into the afternoon of the 16th. And so that worked out pretty well. We have our, as you mentioned, we have the S&P chart here, just recapping my forecasted key dates. And we hit 8 out of 10 on those.
That's pretty good. As soon as you get to be 9 out of 10, I'll have you on again, okay?
That sounds great.
Now, we'll have you on again soon, but I'm going to put you on the spot here now, because you and I have been friends for, 30-some years, and you've been talking about this NOW index that you're looking at. Do you mind sharing, folks? Because when I've known Norman a very long time, and he doesn't go out on a limb very often. If he does, he's got a ladder underneath it. And when he comes out and says he's got something that really deserves our attention, we should listen to him. So why don't you tell us what this index is and what you're seeing?
Okay, well, we might have had I don't know if you saw the follow-up to that. I sent out a sort of alert to my subscribers the other night, and you get that, Larry. So I had a crazy number, and I hadn't seen a number like that in years, but I think it turned out just to be some kind of glitch in the system where I get these option numbers off the CBOE. I've been tracking this thing since the 70s, and I've developed sort of some parameters when you get too many bulls, too many calls being traded versus the puts, or vice versa. It's sort of like a put-call ratio, but I think there's a flaw in the put-call ratio, and so I have an allowance in there that I think makes my way of looking at it better. There's not really anything going on there right now, unless that was a valid number. I'm very skeptical that was a good number. Over many years, I've never seen anything like that happen, where just out of the blue, usually you build to a crescendo. The market's going up, the number's going up, and then you get to a sell area, and that didn't happen at all. That was a crazy pattern, and I was a little bit suspicious of it. But to err on the side of caution, I thought I would send that out to my subscribers and just make them aware that, just in case, and then we reverted the next night. We reverted right back to neutral territory. Matter of fact, we were slightly, the numbers were slightly just across the neutral line in the bullish territory there. So it didn't act the way it should. So I'd rather spend more time on. On the next page here we have my Bradley style, what I do here with my forecasting, sort of Bradley inspired forecast. You can see how that worked out last month. Then we're going to move ahead to T-bonds. You were talking about T-bonds earlier.
Yes, I do want to watch those T-bonds. Let me get those in here. I think they're on the third page here, if I'm not mistaken.
Yes, page 3. That's it. Here's what happened last month. We had the 4 out of 5 good dates. You can see. Oh, and of course Pluto was right. You might find this interesting, Larry, that Pluto turned retrograde there in the middle of April, and you can see that was not the high of the month, but kind of like a final high before the bonds started going off the cliff.
Oh, What do you? Is there any particular key astro date that's coming up that has your attention?
Yeah, well, the reason I asked to be on your show, Larry, is and we're going to talk about that in just a minute.
Okay.
But we have a big window coming up here early next week. Okay.
So that'll be this coming week. That's what we'll be looking at.
Yeah. Okay,
So
if I go through these real quick.
Oh yeah, no, not quick. Go slow. If you have to go on to the next one now. Let's don't spend a lot of time on cocoa and hogs and stuff, because that's the commodity show, and we could have you on another time. Why don't we do the one about the stocks, where you're showing the S&P 500 index in that trading band that's there?
All right, I'll jump ahead then.
Okay.
But we did hit pretty good on those markets. Hitting like 2 out of 2. Those are 100 percenters.
Yep, that's correct.
Okay, so looking ahead, I always summarize the big planetary events of the month, and we have several. The emphasis this month is more on the U.S. financial stocks, T-bonds, and the dollar. But sort of falling between the cracks there under these parameters is when we get two smaller cycles converging to sort of create a synthetic big cycle, and that's what you're asking about. Over Monday, Tuesday, the 18th and 19th, we have both a new moon and Mercury retrograde 1 day apart. So I'm going to move ahead now, Larry, to the next page, I think, where we're talking about stocks here. And when I talk about
you got that posted right now? Yep.
I can't see, by the way, what you're posting.
We have the stock market. We have the stocks on there is what we have.
I just wanted to let you know that I can't see what you're doing.
I understand. You have to be a little bit psychic, Norman. That's all.
There you go. Psychopathic, right?
Yeah, well, we've already done that together, so that's not a problem.
Okay. There you go. Well, we're not supposed to talk about that, right?
Yeah.
Okay. So anyway, we have the 18th and 19th. Now here's where it gets interesting. Now this is not the normal thing. We've sort of phased into where the Mercury retrograde, be about every. Let's see, this is May. Yeah, about every 120 days, and the moon are sort of in sync with each other. They'll probably eventually go out of sync. I imagine it's several years to get back in the sync again. But back in January is when the last time I remember that they did this. And so on the over the 21st of January, we had a new moon and Mercury turn retrograde. That's what's going to happen here on Monday, Tuesday next week. So you can see do you have the chart up there, the S&P chart?
Yes, it's up there. Yes, we sure do.
Yeah, with the red arrow right at the top there on the 22nd of January. That was 1 day later. And from that peak, we dropped almost 84 handles on the S&P 500.
Let's put that up. Well, it's up already, but let's do this. How about coming on as a guest next Monday for a little bit? You want to do that? Just to review?
That'd be great.
Okay, I won't be able to get the check to you right away, but it'll be in the mail.
Okay, well, you can have
we'll have you on at 12:30. We'll have you on at 12:30 on Monday. How's that?
12:30 on Monday, okay?
Yeah, we want to do that.
All right.
Okay,
so
let's
anyway,
go
there
on.
you go. So you can see what happened. You can see what happened in January. Then the market declined in the 2nd of February, which was 1 day ahead of the full moon. We had a new moon on the 20th. Mercury went retrograde the 21st, and the market topped the 22nd and dropped to the 2nd of February, almost 84 handles. Now, I'm not saying that we're going to make a top here and drop 84 handles. If we go down into Monday, Tuesday, we could make a low, and then might have a big rally, But it should be
with this volatility, we can have anything, can't we?
Right. We just look for a change in trend there. If the market gets any kind of oversold or overbought, then it's probably going to reverse and go the opposite way. Okay. Another market that should be affected by this, the grains are interesting. You brought up that Rich Anderson's coming on tomorrow to talk about the grains. You and I did not coordinate at all about what the notes I was going to send you, and so the moon, both the grains are sensitive to both the lunar cycle and Mercury, and so I thought for the sake of time saving, I'd pick a grain. I picked corn. And so corn and chart looks pretty interesting. It's just been down, 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 as you know, Larry.
Yep.
And I think if we could get one more, ideally, it doesn't have to, but I think the ideal scenario, if you get one more little push down here toward the bottom of this channel and test these lows, I think you might get a good setup for early next week, Monday, Tuesday, for some kind of bottom.
Well, we've had a very bearish grain report that Rich will talk to us about tomorrow. But you and I both, Norm, don't look at the fund. Well, I look at it less than you do, but the fundamentals I don't watch. But there was a very bearish report, and the market reacted very little to it. Wheat was down a little bit, and corn was down marginally, and so were beans. But it was rather mild compared to how bad the report was. But we'll wait and see. So you're watching for a potential now on this corn. Would you buy a breakout of that wedge, or what will be your signal?
I think if you got a little bit of a surge down, I might get in there and take a nibble on the niblets.
Oh, yeah, this is a little Freudian slip.
A little bad
Norm,
pun there.
How much you risk if you buy corn? What do you risk?
Larry, a little bit of that Indiana corn.
That's for sure. Would you risk about 10 cents on the corn? Is that usually what your risk is on the corn? That's $500 become a farmer for $500.
I don't think down there you'll have a whole lot of risk. Frankly,
that's been very oversold for sure. That's over a long period of time. There's no question
frankly,
about
with
that.
my stuff, my parameters are you're got to be right within about one trading day, or it's not working.
Well, that's really repeat what you just said. You said that if your stuff is not right within one trading day, you figure it's no good?
I mark it wrong, yeah.
Well, that's fantastic, Norman. There's two things that you've done that is important. One is you've limited your risk with a time stop, which is very good. Right. And not only that, but you're not going to set with a losing position for more than a day or two. Those are two of the best things you can possibly look at.
Exactly. Maybe down here, you could buy a call option. Maybe the calls are probably, I would guess, kind of cheap down here now. Right?
Actually, they're not. Rich and I were pricing those the other day because we want to buy these, and they're really they're fairly priced, but they're not giving them away. I mean, there's some people out there looking for potential of a El Nino event occurring, but one of those high pressure systems coming in over the top of the Northwest that will or North. Midwest, causing some type of a drought. And boy, they'd need a drought to get these prices to move up, but that's how it happens. It happened in 83, it happened in 97, and it happened again in 2004, I believe. So they do occur, and when they happen, they're very, very volatile.
Okay, moving ahead.
Okay, go to the next one.
We have the United Kingdom, Great Britain.
Oh, that's the one I want to look at because I'm really interested in that one right now.
I noticed that too. It's like you and I had.
Don't give me the great minds thing, okay?
Exactly. You and I looked like you and I had rehearsed this, but we didn't.
No.
So anyway, I had the British pound here. It popped up on my astrological radar, and you notice I had, I published this letter, my stuff, the first of the month, for like over the weekend of May 1, and I had May 4. And May 8, and so if you go down here, this pullback low, as you know, Larry, was the 4th of May, right?
Yep.
And then we had, I think, a little pullback right around the 8th here, might be off a day before it took off to the races, right?
Yep, it certainly did. So it's done exactly what you said it was going to do.
So here's the exciting thing now, Larry. We got some more dates coming up here toward the end of the month. We have just after Memorial Day weekend on the 26th.
26th.
26, 27 is a big window for the pound. And then we have the weekend of the 29th.
Mm-hmm. Oh, that's good. All right, but we're going to have a break here in a second, but I want you to stay until after the break. Would you do that?
Okay. Sure.
Okay, what we'll do is we want to have you back on Monday, the 20, which will be coming up. That'll be the 20th. Oh, we're going to take a break here. Stay with us, Norman. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we're talking with Norm Winsky from Astro Trends. Norm, we have we're going to have you back on the show on the next Monday, and could you go over the folks the main things that you're looking at for next week, starting with the lunar things?
Well, we just have the 2 cycles converging, where we have the new moon and Mercury turning retrograde over about a 24-hour period, similar to what we had in January on the 21st. And then, as I showed you on the S&P chart there, then we made a nice top there, and the S&P then plunged about 84 handles.
It's over $4,000.
Yes, sir.
You can go
I got one more chart to go. Can we look at that?
Yes, sir. We certainly can. You're my guest.
We're on the next page now. Page 9. J-Bank is my my nickname for the Central Bank of Japan.
Is this the June Japanese yen?
Yeah, I have the June Japanese yen on here, and we have 2 dates popped up on my Astro radar. For the 26th. Interesting, that kind of corresponds to the British pound, and I also have the similar to the British pound. Also have the weekend of the 29th. Those 2 dates correspond to 2 of the 3 dates for the end of the May for the pound. So something's going on there. Maybe the central banks are going to all get together and screw the currency market or something, you know?
Mm-hmm. Well, they have a tendency to want to do that anyway, that's for sure.
One of the neat things about I think one of the neat things I'm doing here is I actually believe that I have insight into what these banks might do in advance. It's kind of like having legal inside information, you know.
Was that because of what, the astrology part, or?
Yeah, exactly.
Huh. Wow. Well, I believe JP Morgan was certainly interested in astrology. So let's get you a little commercial for yourself in here.
Yep.
How people want to reach you, how would they reach you? You want to just give them your website and your phone number?
Absolutely. Best is to call me if you can here in Florida at 239-594-3939, 239-594-3939. If you're overseas, you can reach me on Skype at norm.winsky. That's norm.winski.
Okay, that's fair enough. Well, listen, we're going to have you back on Monday at 12:30. How's that?
Sounds great. I appreciate it.
Yeah, thank you for joining us, and we'll see you then, Norman. Norm,
right, thanks a lot, Larry.
You bet, buddy.
Okay, thanks. Bye.
You bet. Okay, folks, we're going to have Norman back on just to put his feet to the fire on Monday to see what happens. But we do have these two main astral things coming with the new moon and Mercury turning retrograde. And, you know, it doesn't work all the time, but you want to be at least aware that these things can happen. So let's put that into the old radar, and we'll be watching it, you know, very, very closely. We've had we're going to have Rich on tomorrow about the grain markets, because we've had some pretty significant things happening in as far as reports. He will talk to us about that. The lows that we made yesterday night around 3 o'clock in the morning, I think it was New York time right after London opened, we hit a 61% retracement from the previous day's low on the New York Stock Exchange. Well, the S&P 500. We hit the same thing on the NASDAQ, and the Dow Jones made a 50% retracement. So far, those lows have held. That's 2080 in the S&P 500. Should we get below that, I think that market would be in serious trouble, and we could possibly be looking at a sharp low coming in on this coming Monday, when we have the new moon and the Mercury going retrograde. But if we break out to the upside, we could have 3 or 4 days of strength without hardly any trouble at all, because this trend is certainly strong, and the markets have a tendency to run in the direction that they want to run, and that's it. One final comment about the gold. If this market is really good, we're going to have follow through tomorrow, and we'll talk about that when we're on the show. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.